When it comes to clean tech, Canada continues to punch above its weight. So to explore what's behind this Canadian clean tech advantage, I'm joined by Michael Gryseels, founder and managing partner at Antares Ventures, which is an early stage VC firm out of Singapore that supports deep tech startups tackling sustainability challenges in Asia's growth markets. So welcome. And also joined by Jason Blumberg, co-founder and managing director at Earth Foundry, which is a U.S. venture capital fund that invests in groundbreaking climate tech companies. So welcome both.
Thanks for having us.
So Michael, I'll start with you. You founded Antares Ventures in Singapore to help companies around the world break into the Southeast Asia market. However, in good reason, a significant portion of your investment has consisted of Canadian companies. So what is it about Canadian entrepreneurs that's been exciting for you?
It was, I think, never a deliberate strategy to invest disproportionately in Canada, but I think it's where we found a combination of a couple of things. Number one, I think, is the founders, which on average we think are just of higher quality, higher determination, higher grit. And we found also, both founders and co-investors that have a global mindset and, have that global mindset early on in the venture. And that's very important for us because our objective is to get them over to Asia.
And I'm curious, just following up on that, Canadian clean tech companies are born exporters. We're a pretty small country. So we do, a lot of the times, the first contract is even outside of Canada. But what's Southeast Asia's kind of clean tech need or competitive advantage, and why do you encourage ventures to go there?
I think a couple of things. So, for example, 65% of the region is still powered by coal. It is, unfortunately, doesn't have wind energy, even solar. People think it's tropical, so the solar should be good, but it's cloudy all the time because it's raining a lot. And so we need our own solutions. And so therefore, we look at kind of which other countries have things that are similar or that, technologies that we can transfer. For example, Canada has been a pioneer in geothermal energy. I mean, you've got Ever and other companies here. Southeast Asia has 50% of the world's geothermal reserves. You have, because of, again, combination of traditional industries and government support, you have a lot of ocean tech. Southeast Asia has 200,000 kilometers of coastline. And so we found that care for the environment in combination with tech is something that Canada has pioneered a lot. We found a lot of ocean tech companies here. Even though the regions are very different, Canada has solved a similar problem. And so it's, and we have a market need, so it's a good export.
Jason, you've also made some investment in Canadian companies. In your firm, we've gone through kind of how you do your due diligence. I mean, you've seen hundreds of pitch decks every single month, thousands of pitch decks every single month. So what made Canadian ventures, like your investment companies, EaseInc, Nextlight, stand out?
So we'll look at 2,000 innovations a year with a goal of trying to invest in a half dozen or so. And so it's a pretty big funnel down to find the right innovations. What we find about Canada, as mentioned, is this supportive ecosystem where you have the innovation, you have an interest in commercialization, then the tools are there to help think about what are those commercialization paths. So when the innovation is getting close to being ready, it has a shot of moving forward. A lot of innovation never has a pathway to get there, or it sits in a lab and no one's thinking about that. And so whether it's programs you folks run like Women in Clean Tech, where you send folks into the labs, or whether it is the universities thinking about how do I actually turn this into something, that doesn't happen in a lot of institutions or cities or countries. And so that pathway allows for things to be much closer to someone like us to be ready. It's still a hard funnel because there's a lot of things that are trying, and 1/3% of things to invest in is a pretty small number, but on a percentage basis, a much higher hit rating in Canada than other places.
We talk a lot about the lack of private, particularly early stage funding in Canada. And so that means a lot of entrepreneurs need to find a way to scale bootstrapping or with not much seed capital. In your experiences talking to Canadian companies, what impact does that have on the ventures as they scale? Maybe Michael, I know you have some insights here.
I think, I mean, I actually think it leads to ultimately stronger ventures. And why is that? Let me just give you some examples. I've seen founders here, on one hand, being far more committed to their ventures. Several of the companies, like we were amongst the first investors in Summit Nanotech. The founder, Amanda, mortgaged her house to start up that company. The founders are far more resourceful because they can't get as much of that pre-seed seed funding from the local ecosystem. So they try to stretch every dollar more by, on one hand, being lean in how they operate, and also leveraging to the fullest extent government support that exists in various forms. And I think thirdly, I think it is actually driving them to commercialize earlier, because the larger funds would only come in once the revenue is, the ventures start to generate revenue. So I find in general that there is a commercial focus. So I think overall, I think it makes them more resilient, more productive from a capital perspective, and more commercially focused, more internationally focused than perhaps the same ventures on the southern side of your border.
Let you comment on that, but I think it's some optimism to bring to a challenge that we see quite often. Jason, any thoughts there?
Sure. Yeah, I think that some of the government programming that supports from non-dilutive helps get them farther along. I do think that there is a big gap overall, and so it may make them more resilient or productive, and it does help from a venture perspective that the valuations aren't as high. So as you go through the steps, you can have a higher chance of success, because if you start at a high valuation and you don't achieve things, you end up going bankrupt, and if you start low, you have a much better potential for moving forward. So that's positive. On the negative side, what we see is there's not much institutional support to support early stage venture funds. There is later stage. People are starting to get into that area. And that's not just in Canada. It is more in Canada, but in the US a lot as well. In this space, people have lost a lot of money over time. The investors are usually new, and so they get some money together. They lose the money, and then people don't want to do it again. So I think being thoughtful about our space more generally and how do you convert these into opportunities is key. And then backing these early stage companies needs to happen to really get them going. And that starts with the decision makers and pension funds more generally allocating some money and saying, I'm going to do this because there's a lot of reasons for it. And that can be hard for the person making the decision, because at the end of the day, they are an individual decision maker whose job is on the line as how is your returns and performance. And if it's not good, then their jobs are not going to be available to them. So it is a hard situation.
So on that, then, spinning kind of our lack of early stage private capital as potentially, building more resilient companies, ones that are financially responsible, you can maybe say. Any other advice on how Canada's ecosystem could foster more world-leading climate companies?
Yeah, I think, we've seen in all of our companies, the non-dilutive support that it's gotten has always been useful, and to make sure that continues to be there. In any of these businesses, there can be times where an inflection point can be helpful to overcome with non-dilutive capital. And it is hard to come by, and it should be. But identifying the right times is key. And Canada's done a good job at that traditionally, and continuing that, I think, is important.
Sets us above the rest. Yeah. Michael, any suggestions there?
Yeah, I'm going to comment from my vantage point, which is that I think Canada is a hotspot for innovation, particularly in clean tech. It's a small market. And so I think your founders need to think global on day one. I think that's the good thing. I think the question is what support do they have? It seems to me that still a lot of the investors here are local, how do you attract more global players to come to Canada, and kind of ecosystems that should be an example for Canada is like Israel or, even Singapore. Basically, they don't have a big global market, but they want to be global beacons of innovations, and they spend a lot of effort for getting global capital come into that market. I mean, that's up to the entrepreneurs to be looking. We've invested in Summit Nanotech. We're in there with Temasek and with Capricorn from US. In Earth Energy, we're again there. It's a global mix. So we're 2 Asian investors, 1 US investor, and then BDC. But I would say they're probably still the exceptions of Canadian founders that have that kind of global cap table. But I think, the orchestration of how do you get global capital to come to Canada, how do you get your founders and your ecosystem to take a global view, perhaps even more in this world, because there are opportunities beyond North America of your company. So that would be my advice.
Suggestions then to founders, if they do have that global mindset, which I will say, I mean, if you want to do anything in Canada, you have to have a global mindset. How do they impress you guys as international investors? What would you be looking for to be impressed by one of our founders?
So we're typically looking for the world's most disruptive innovations in whatever segment they're in. And there are a number of those that come from Canada. But what we find is that not everybody does a landscape analysis. And if they do, they're looking at what the market has today. They're not looking at all the other startup competitors to say, where are they in that race to be successful. And so if they did know that they weren't the best, they would either try and improve what they're doing, or they would find something else to do. And it's interesting when I talk to professors and they'll tell me like, oh, here's what I'm doing. And I'll say, or even a startup, and I'll say, well, can you make that 25% the price that you're looking at? They're like, I don't know. Let me go look. And they'll come back and they'll be like 50% of the price. I figured out how to get to 50%. It's like, why didn't you do that before? Because nobody asked me. I thought I was good enough. And so that happens all the time. And so if you can set the bar higher, and they've got to make trade-offs to achieve that, but if they find out that they are significantly behind where they need to be, their improvements can be a lot better. And then somebody like me who sees many, many innovations like that, I know instantly, not instantly, but often, is this great or is it not? And so if they had that view, they would be able to do a much better job impressing folks. Not like, here's my landscape and here's where I fit, but just here's the metrics and I'm X, this is my metrics. And I know, or they can compare it to why they're so much better.
Do you find that hard at the early stage when, they're years potentially away from that final unit economics?
No, I find it hard because they only have 24 hours in a day and they need to sleep for some of those and eat for some of those. And so now you're going to say, wait, I've got to spend X number of days doing research, not on my product, not on my customer, not on those areas. And that's the problem. That's the key is really just spending the time to do it.
So you both invested in a few Canadian companies, but any advice on how Canada's ecosystem, how we can foster more world-leading climate ventures that will grab both of your attention?
So I think, first of all, the ecosystem, is already one of the best globally. I think thanks to Mars, thanks to the various efforts of your governments and government-linked finance institutions like BDC. I think then the question is, how do you go from here to even greater? If you want to make global champions, go all the way. And I think that requires, on one hand, to make sure that your founders take a global view of what's out there, and that is also requires them to have exposure to markets that are very different to North America. So like from our side, we spend time in China, not because we invest there, but because we want to understand what's happening in China. And I think, China is still setting, frankly, the lead on many things in clean tech. So one is kind of make sure that your founders, your entrepreneurs have a global view. And two is continue that effort of making this a place that is attractive for global investors to find great clean tech companies. And there's examples out there obviously some with a lot of history, but that have been Israel or Singapore that have been global leaders, small markets, but hotspots of innovations that have been able to attract foreign capital and are globally seen as beacons. Like people know that if they go to Israel, there's a lot of innovation. In Singapore, like it's happened in biotech, it's happened in semiconductor. The government wants to replicate it now in clean tech, but that requires that you pull people in and give them reasons why they should invest in the market. So those would be my two pieces of advice. But I think again, first of all, you're starting from a position of strength.
Good to hear. Jason, any thoughts?
Yeah, that's a great answer. I think as we interact with all the ecosystems in North America and globally, we get a lot of questions of what are the ecosystems that we should benchmark against and try and look at to see. And Canada, Mars, Toronto, a great ecosystem. So we often point to a thoughtful approach that Canada's taken to think through each part of the value chain and how do you plug in to each of those. Where there's significant support is from the research university all the way through. Late stage companies, there's support. So Mars plugging in there at the early stage and figuring out a lot of that is great. When we get to, and we discussed this, the follow-on funding, that follow-on funding can be more challenged, but that's because the amount of capital it takes to do that and the risk capital and the type of person that it takes to do that is limited because you need experience in that area. And so making sure that there's the support mechanisms post whatever thing you guys do is key to helping build out the ecosystem. There traditionally has been support in non-dilutive capital, which has been very helpful to attract investors and also get the companies to the next stage. Continuing on that is an important part of delivering on a successful outcome. And then having institutions that will support folks like us to invest in those type of companies is key as part of that as well. And I think the ecosystem could benefit from having more of that type of capital come to the market.
Well, we got both of your funds that are.
Yeah, well, lucky to have you help us shepherd through everything. So thank you.
Over the past year, we've seen a lot of talk about AI. I've spoken with a lot of investors that are interested in climate, but it's much more capital light, AI all over the place type of climate solutions. So after the 2021 to 2022 climate tech investment boom that we saw so many more players in this space. I mean, I've been in this space since 2014. Not many investors at that time, so it's awesome to see how many are here. But do you think now climate hard tech innovations are being overlooked? I know not from either of you, since that's your thesis, but have you seen more investors getting this space, larger syndicates that you can put together, or how has that moved within the recent years?
I'll say two things. So first, I think on AI, I think AI is critical also for hardware companies. We have in our portfolio, I'll just give you three examples. We have a company that has a battery management system that is totally using AI to optimize the lifespan, the range, performance of a battery in the context of a vehicle. It's a combination of hardware and software. We've got an autonomous, Open Ocean Robotics uses AI for autonomous navigations of its boats. We've just invested in an electric plane company that uses AI to land. I think that actually AI is going to be critical even in hardware investments. That's the first reaction I have. The second is on the question is whether capital has disappeared. I think there's two things. I think there's been the general macro, which I think has just kind of led to more risk aversity. And obviously what people are concerned with hardware is the huge amounts of capital that it will require in manufacturing, in projects, etc. And so, just a higher cost of capital with interest rates that have gone up and the switch from risk on to risk off, I think has just not helped. I don't have a crystal ball. I don't know. Many people have opinions what is going to happen to interest rates, but hopefully over time we'll see more risk tolerance and risk capital. And obviously, you could even say that some of the AI companies have kind of defeated that because they also need a lot of capital and they managed to get it. And I think the second thing is that there's right now, I think particularly with the US elections, there's uncertainty around how, what's going to happen policy-wise to climate transition. I hope that uncertainty goes away quickly and then things will, because just the last thing, investors just hate uncertainty. And so I feel like a lot of funds are just standing on the, waiting to invest because they don't know how things will play out.
Well, American investor, what are your thoughts?
So venture typically follows a hype cycle on a segment. And so wherever there's a segment, especially if the segment is not that technology heavy, it's more business model heavy, they'll follow the hype cycle and go there. And so capital just moves to those areas. AI before that, Climate fit in for a little bit after big data, as apps were trending down some, as software's trending down some. So there was a movement there with the IRA and with some of the actions that were happening around the environment that drove that. That's kind of no different than when we had ERA in 2009. So when President Obama did the stimulus, there was a similar type of environment where you had a lot of capital go in and a lot of value destruction. What I don't see as much is a lot of bad decisions that were made that will cause a lot of value destruction. So it won't be as detrimental to the industry, the hype cycle that happened. But it will be harder to get capital. There'll be less crossover investors. It just means you need to be more capital efficient to make smarter decisions as you look at how you build your companies, because there's always two ways to build a company, and we went back to this with Canada, that you can build a company efficiently, managing your capital stack, or you can put as much money as possible in to see how quick you can go. And that model hasn't really worked well. And commodity spaces, it hasn't worked well. Solar before, hydrogen now will have some of that washout that will happen. And so, if you invested in hydrogen, you're probably not going to be happy. There'll be a few winners, maybe yours will be, but in general, you'll have some washout in certain sectors. So that will cause a little more retrenchment. But overall, we've got a much better set of assets. We've got a much better set of entrepreneurs, better set of investors than we had during the last crash. And so it will endure going forward. We also have a lot of crossover or a lot of corporate investors that have come in. And those corporate investors don't appear to be going away. It's always was a question of would they disappear, but they lack innovation as companies generally. And so open source, outsource innovation helps fill some of the gaps on that. None of those companies are struggling in general as a pool. So because of that, they'll continue the open innovation. It's worked for a long time now. And so we'll continue to see that. So corporations coming in fill the void, but overall there will be kind of less excited capital that comes in when you have the hype cycle that happens.
So I think the last thing that we're also, and when I say we're, collective climate global investors and ecosystem that we're missing a little bit is one, increased revenue generation, but also exit activity. Speaking with a lot of generalist VCs, that's what they're looking for, is I haven't seen enough proof that I can make a lot of money from this spot because of the lack of exit activity. So in both of your opinions, what is needed to get cleantech solutions to that next level where we're seeing increased revenue generation and exits?
So exit activity comes from two ways. It comes from exits to corporations, or it comes from exits to IPOs. And so the corporation and IPO windows have been kind of closed in the US because of SEC overlooking on a lot of these companies. That may open up some in the near future, and that could be beneficial. I think the second thing is it's company dependent. So if you've overcapitalized an asset to its value, your exit potential decreases, or you take a much lower return. And so folks will continue to fund assets that haven't met the valuation that they want, hoping they'll grow into it. It's like buying clothes that are too big and hoping you'll grow into it. It's probably not the right choice, but what a lot of people have done. And so if you've built a company that has steps of valuation that have exit points all the way along, then you have a lot more options. And so those exits are much more likely to happen. Circling back, the Canadian companies being valued reasonably, being efficient, much more likelihood of exit options on the horizon for those type of businesses.
How early should you start thinking about that?
I think whenever you think you've optimized your company as much as you can, if you're going to take a lot more capital than the value creation, then it's not a good time to take capital. If that value creation can be significant, then you should take capital. If you sell a quarter of your company for $10 million, your value is now $40 million. So then the next time you do that, you need to turn that 40 million into 80 or 120 million. And then the next time you do that, you need to potentially be at 350 million. So if you can't make those jumps, then it's a good time to consider what your alternatives are.
Good advice.
Yeah, so I agree with a lot of what Jason said. Our LPs are primarily corporates. We are working, and beyond our LPs, we're working with more, I think, the climate, there's a lot of corporates that have understood, whether they were in energy or not, that sustainability is a business, and that want to kind of, diversify or add that as as something into their portfolio. And we as a fund, actually, one of the things we try to do is to try to get corporates in as soon as possible. Sometimes it is, to just kind of get that initial proof of concept, but more importantly is to have sources of capital and strategic partners that are less, depending on the cycle, and over time could even be, exit opportunities. And to your question on timing, we try to get these corporates in early. Then obviously there's a way to do it that none of those corporates become too dominant in the direction of the company. So for us, it's by us as a fund being there and keeping them as an LP and then facilitating commercial collaboration. Or if they come in, it's, we try to work with corporates that have a professional venture arm and understand, what a startup needs to thrive, and just making sure that we've got that balance between an independent direction for the startup that maximizes the value for everyone, and the strategic support for the corporate, whether that's through capital, to commercial synergies, or to, taking off, for example. And I firmly believe that in this new environment, founders and startups need to think about how they build a more asset-light. So, you can be a hardware company without needing a manufacturing plant. You don't need to go into product development yourself. So I think, when all the capital was there, I think companies, back to, the clothes are too big, like they try too much. And I think at the end, if you look very clinically at most of these startups, their core differentiating and value add is on the R&D front. They're frankly not good in manufacturing. They're frankly not good in project development. And so I think to find out, and it takes time, and I think it's something that needs to be done early. You need to think through about what's the corporate structure, how do you leverage off balance sheet capital from partners or from third-party financiers to scale the company, I think. And again, that leads to ultimately, one, more capital productivity, two, valuations that are more reasonable, and three, it gives you optionality with respect to exit.
Yeah, partnerships are very important. So on the market itself, there's a lot of industries out there that are contributing to our current environment. With the solutions that you see every day, as well as the ones that you've invested in, how bullish are you that we are creating companies that will address those environmental challenges that we're seeing?
So what we're talking about is $14 trillion in GDP. It's an exceptionally big market, and everybody wants a single solution, the silver bullet. And what we end up having to do is have lots of solutions, which ends up being lots of opportunities for new innovations to make money, for market opportunities to solve those. And so if we go through the most pressing problems, there's a number of great innovations that are coming to market. There's a number that are in the labs, and there's a number that people are working on the early stage. So we're very bullish on solving individual problems. We've just got a lot of problems to solve. It's not one, whether it's plastic in the ocean or whether it is CO2 in the air or many other pollutants we put in the air. Every one of them, there's folks working on these solutions in Canada and North America, globally, and bringing those out, doing it a lot better than we have before is important. And so having that customer pull, the mindset shift, and the technologies all coming together is the key. And so making innovations that are much cheaper, much better is what you have to do, and what we're working on and they're working on.
You agree?
No, I agree. I mean, I think let's decompose this first. What have we solved or what have we not solved? I mean, if you think about the technologies that are really mature and can scale now commercially, it is very few. It's electric mobility, it's solar, it's wind. Many hard to abate sectors still don't have, haven't cracked that kind of technology that has a unit cost that can scale. There is, even in mobility, we've done passenger cars. We haven't figured out how to decarbonize. That's 30-40% of the emissions in transport. And even in my world, where I come from, it's even 10 to 20% because people drive very different type of vehicles. So like, maritime planes have not been decarbonized. And then there is other kind of sustainability challenges, right? So there's the problem of plastics, the circular economy, there's agriculture. So there's, I think, many things still unsolved. What I would say on the positive side is that what I think the last 15, 20 years have brought is they've brought a combination of government support across the world. And I think one single government won't affect, I think, the overall momentum that we've started. Two is there's a lot of corporates that have actually jumped on this because they see this as an opportunity for themselves. And then I think thirdly, I think from an R&D perspective, globally, there is far more R&D dollars going into solving these things. And so I just see, I mean, I spend a lot of time, we're early stage investors, so we spend time at university labs, not that we kind of invest at that stage, but to understand what's coming out. And I just see a lot more promising things coming out with innovation happening at faster pace than it was 10, 15 years ago. And I think it's because there's convergence of innovations in computer science, AI, and others, so quantum computing. There's innovations in material science. There's innovation in new propulsion techniques and others. And so I think all of that comes together, leads to deeper breakthroughs than we've seen before. I think the playbook has also been more developed than it was before. And I think there's the capital ecosystem is more established than it was 10, 15 years ago. So I think I'm an optimist. I think there is still a lot of challenges to be overcome, but I see a momentum that I don't believe can be stopped. And I think as the playbook gets more and more understood, we'll solve more of those challenges productively, fasterly, and deliver great returns while doing it.
And I'll dimensionalize with a few examples. So Polystyrene, which is a Canadian company we backed, they are recycling polystyrene and heading towards plastic at costs that are less expensive than buying it virgin material. And so the ability to do that, to buy recycled material cheaper than you can buy it the traditional route, makes for a much different outcome for how you think about plastics and what you do with that waste.
And so do you think it is a question of, for these global challenges, the technologies exist, it's just a commercialization scale-up problem, or we still need to invent a lot of this?
A lot of stuff.
Yeah.
No, I mean, as I said, in the 90% of the problems don't have technologies that have unit economics to scale, which just commercial capital. And so I think for a lot of these challenges, there is innovation, but it's not yet at the unit economics to truly scale without some kind of financial support. So I think there's scaling, but there is still innovation that needs to happen. I would say
Both sides.
Both sides.
So last question, we'll do a little bit of a rapid fire. If you're to identify your top 3 areas of advice to give to entrepreneurs and Canadian ventures in particular looking to raise funds in the months ahead, what would you say? What are those 1, 2, 3 words of advice?
Think global, business model, capital efficiency.
Quick to the point.
I would say talk to the customer and find out if you actually have a solution that they want. Understand your unit economics and whether you're 10x better than what the market has, or at least 5x. And then number 3, understand all the milestones need to achieve from where you are today to what that customer wants.
Those are awesome advice. Well, thank you both for joining us today.
Welcome.
And yeah.
Thank you for having us.
Yeah, great.
Great
Thanks so
conversation.
much. Appreciate it.